is Aditya Khurjkekar at MEDICI Studio, and I'm here with Salil Ravindran, our head of Neobanking and Digital Banking Advisory. We published the Neobanking report and the Banking as a Service report in 2019, and ever since those two reports went out into the ecosystem, there has been a deluge of interest in neobanking and setting up new banks all around the world. So we wanted to use this new format for the MEDICI Studio content to really have a discussion on what does it mean to look at financial services as a service. And the impetus for this is really the work that Salil and team have been doing on the neobanking side. But the other motivation to do this is to bring conversations in FinTech to our audience via this new format on MEDICI Studio. And Salil, thank you for taking the time from all the wonderful new reports that you're going to put out in 2020 to talk about this topic. So if I were to ask you the first question, just to lead this conversation off, why as a service? What is the motivation to look at it in that frame?
Yeah, if we were to kind of do a simple rollback of about 15 years, we would have to look at the situation then and see how financial services was fundamentally delivered to anyone who wanted it. It could be a consumer or it could be a business. Traditionally, financial services has always been a very closed sort of a business in terms of the products, services, capabilities, and so on and so forth that the agents of that service would offer. And that has created its own set of innovations, no doubt about it. But at the same time, it has not really, led to a situation where anybody can consume those set of services. And this is where, I think cloud changed the whole thing. The term as a service, as a phrase, is typically associated with cloud. But I don't think it carries a technology connotation anymore. Pretty much any business can be offered as a service today. And if we were to fast forward to where we are today, pretty much anything and everything, and not essentially just technology, is available as a service. And that would mean that it is easily consumable. It is cheap enough. The kind of barriers to consume a particular service is no longer there. And that is pretty much what as a service means. And today, financial services has reached that stage. We started with availability of technology in terms of infrastructure and platform as a service probably about 10 years back. And we've kind of moved up that stack. And today we have what we traditionally called applications or services which can be consumed by people in the form of a service. So which means, payments is today available as a service. Simple banking products and services, which 10 years back was really the forte and, within the confines of the four walls of a bank, is now today available as a service. So pretty much all of this is available as a service, which points towards easy consumability of these services and the cheaper availability of the services. So this is what pretty much as a service is all about. And I'm sure you're noticing quite a bit of that happening, Aditya, in different parts of the world. So my question to you is, I'm really interested to know how this is kind of manifesting in areas outside of financial services, because financial services, consuming financial services within itself is pretty much a no-brainer. But the real applicability of it comes when it is being adopted by other industries. And how do you see the adoption of this really happening in other industries?
I think the genesis for as a service, like you said, has had technology roots, cloud roots, and so on. But I remember more than 5 years ago when we started looking at the ability for payments to be hidden behind the scenes, right? We were talking about Uberization of payments, right? And I think in that construct, the focus was not so much about how technology is more available or consumable, but the focus was really about experiences being the focus of innovation, right? The innovation in this case was that you had a ride-sharing app as a very seamless, very beautiful experience to make life easier for passengers and for people looking to go from point A to point B. And the fact that the payment was just taken care of in the background was just amazing. Right? And I think to your question, it's not about financial services as a service, which is what we cared about, but we cared about the fact that people were able to book a cab and get from point A to point B with lower friction.
It's just a means to an end.
Exactly.
For a particular problem statement to be solved.
Right. Now, if you now have that same mindset of a taxi use case, being a more pleasurable experience, what are some other experiences in people's lives that can be made better because we are now able to remove the financial services aspect that might have caused friction in that use case? Absolutely. I think that is how we have to think about this in my mind.
No, you're absolutely right. And I think we can see we have pretty much any industry that we talk about, be it mobility, e-commerce, education, healthcare, insurance, any of those sectors that we look at. I think this has become all pervasive now. Like you rightly said, I think the barrier to consume a functionality is no longer there, or at least it has minimized up to a very large extent. But we still have a long way to cover. And like I said, it is platform and infrastructure which was once upon a time a barrier, a cost. And now it is slowly coming down to that no longer being a barrier. It is easily consumable. The likes of AWS, Microsoft, and all of those people have really made that possible. And now we are starting to look at how lending can be brought in as a service.
Right.
We've had some conversations with some very interesting people outside of the financial services industry, such as people from the education sector, where teachers are such an important. And if you look at any emerging market, they are kind of the lifeline, obviously, of the whole education industry. And are we able to understand and meet their needs well so that the whole industry runs well? The answer is no. And probably, things finally end up where, are we able to bring credit to them easily enough? And this is not just a case of just the education industry. We could look at small and medium merchants. So several cases, and I think it is more prominent in the emerging markets.
And I think it's also allowing the silos within financial services itself to be broken, right? Because let's look at the use case of lending as a service, right? Even though we don't use that terminology often, if you think about how we are now able to offer credit at point of sale, how we are able to offer credit at checkout, how you are able to offer credit without the experience being that of a lender that the consumer is looking at. The consumer is looking at something that the consumer would have done anyways.
Correct.
And the fact that there is a lender behind the scenes is what makes it as a service. And I think that's something that we are going to see a lot more of, in my mind, right? We are looking at lending now. We were looking at payments 5 years ago. I feel like there will be other classic financial services utilities, and that is the word for it, classic financial services utilities, which will no longer be seen as branded, differentiated financial services. Rather, is it too preposterous to say that even things like savings and wealth management and things that are associated with high value offering from a big bank, that those are going to get commoditized? Is that the right word?
Oh yes, absolutely. And I think it is pretty much starting to happen. I think the simplest place to go to understand is the whole financial infrastructure world. It probably started with some of the open banking regulations that starting with Europe, of course, with PSD2, and then that kind of extended to different parts of the world. So a very clear opportunity started emerging out of it, not just from a business standpoint, but an opportunity to really solve a problem which plagues many businesses, which is the fact that these services are not really consumable today. And there has to be a way to sachetize these services and consume them well. So I think one thing we are observing through our research, which we have been continuously doing for the past 8-9 months, is a very small area like card issuance and card processing has really become a service today. And what that has really led to is, it's become very easy for people who are operating on the fringes of financial services to start offering cards or anything of a stored value. It can be a virtual card, it can be a physical, cool looking card, anything of that sort. Until now, it was sort of a difficult thing to do because you had banks involved, you had the card networks involved, and it was a barrier. But now that whole thing has moved into a service. It's available as a service.
Let me ask you to wear your research hat here as opposed to the advisory hat, right? Would you look at the whole neo-banking, challenger banking narrative that we hear today in the same conversation we are having of FSAAS? Would you put that in the same category, or is that a different conversation?
Absolutely. I think what financial services as a service has done is to make it easy for neo-banking models to execute themselves. Without these sort of products and services available as a service, it wouldn't have been possible for so many neobanks to come into the market. So the whole over-the-top model of neobanks that we see today, and probably 80 to 90% of the neobanks that we have seen globally across the mature as well as emerging markets are mostly over-the-top models. They are not essentially running with a license or a charter, and that whole model has become possible because many of these services are available as a service. Many of these products and services and processes are available as a service. There is still a long way to go because the more we talk to institutions, we find that they are not essentially very easy to do. That's because there is a certain mile to cross for banks and financial institutions as well to provide them technically available as a service. But I think they've come a long way. So the whole world of neo-banking, I think, has been made possible because such a thing.
Now there has been some criticism or some frustration, even in the parts of the world where the regulator has established the expectation of open banking, for example, in Europe. Right? I just saw something from the CEOs of one of the largest neobanks saying that hasn't really done anything for us. Open banking has been useless, right?
And I'm sure the United States has a lot of views like that coming out. And generally, I think the emerging markets, the developed markets rather, there's a lot of view that has been coming out. Yes, sure, that's true.
Now, I'm always the ever optimist, right? So I feel like we are still in the teething stage here, so we have a lot of work to do. But let's talk about regional use cases. Let's talk about what is the true impact, because one of the things that is fascinating for me, not just about financial services as a service, but fintech overall, is the impact it has on society and economic development in general, right? I feel like even as compared to 5 years ago, because of the availability of open platforms, we can do things that were impossible just a few years ago, such as being able to offer microcredit at scale using technology rather than a philanthropic mindset, right? Or being able to move money across borders where it's been an evergreen space, right? International remittances has been a couple of 1,000-year-old industry, but even then, every 10 years we see a new wave of innovation there. What would you, if you were to put your crystal ball now in front of you, what would you think? What should we expect from this as a service enabler to enable for us in the coming years?
Yeah, that's a pretty loaded question. I think the use cases are different really for different markets. What as a service models, financial services as a service models would try to solve in different markets, I think the objectives are totally different. I think we just need to go back to, for example, what led to PSD2. That's a good start for us to, looking at how this would pan out. I think in a more mature market like Europe, the objective was different. It was to ensure that there is a lot more transparency. There's a lot more participation of the whole ecosystem. Innovation grows, and the cost of doing transactions comes down. So that's clearly the use case associated with PSD2. And therefore, now we see a lot of, fintechs coming in to that whole ecosystem as an account information service provider or a payment information service provider, AISPs and PISPs. Whereas the objective in an emerging market, the developing market is kind of different. There's a lot of emphasis on financial inclusion. So if you look at an emerging market, it is about how you can include the so far excluded communities into financial services. And this is because, a lot of them are cash-based economies. So step one is to see how you can convert them into digital. And out of digital comes data. And it's not enough if you just have data in silos. As a service model, specifically initiated by open banking, tries to bring that data into a shared ecosystem. And out of that sharing of data then comes a lot of innovation on its own. So the idea is to set a platform in those respective markets, be it a Western matured market or an emerging market, to ensure that the ecosystem grows around not just sharing of data, but also then the set of as a service models that are built around it. And a combination of all of this satisfies a bunch of use cases.
And I think that's where I feel like the possibilities are almost endless, right? Because of the dozen plus projects that we are working on right now, we have a handful of them which are being promoted by players outside of financial services, right? So people from other industries, other sectors, now having the confidence to say, yep, I can build a bank, I can launch a financial service without having the pedigree of sorts in financial services. That's the fascinating thing, because now you're able to take the needs of particular communities, particular geographies, and bring the AAS part of financial services to solve for the use cases of those communities and geographies. That's a fascinating, very, very powerful thing in my mind.
Do you see the application of as a service models getting a lot more into healthcare and things like agriculture? Do you see those flavors?
Absolutely. In fact, one of my pet peeves is that when I visit a doctor and when I have to fill out 2 or 3 or 10 forms before the doctor sees me, it is extremely frustrating for me. Now, some people love to fill out forms. I haven't found one yet, but maybe there are. But I hate filling out forms, right? And now, if I'm able to now take the benefits of technology and identity and trust is obviously one of the biggest parts of any financial service. So if we are able to offer that healthcare provider identity as a service, that I go into the doctor's office and all I need to do is to give them my phone number and my entire form is filled out for me. How beautiful is that? Right? And I haven't even talked about payments yet. Right? So, healthcare, absolutely. Agriculture, I mean, look, we have been teased by the power of technology to help farmers get good pricing. Are we really at a point where farmers are getting the best price for their crop on a consistent basis? Probably not. They still work to do. Why is that?
Too many layers before it actually goes to the beneficiary. And I think that's one of the problems that this kind of an innovation tries to solve. Instead of passing through multiple layers before it actually gets to the beneficiary, be it funds or any sort of information. So one thing it tries to do as a service models is not just consumption of certain services on an easier basis, but it also tries to kind of remove the disparity or information asymmetry.
Right.
It tries to do that. I think India is trying to do that, for example, but there are a lot of other agrarian economies which are also trying to make use of all of these models into agri-tech. And hopefully, over the next few years, this should improve, and we should start seeing the benefits of this being consumed into other industries. Yes, that's where we are very much on the path of that.
Right. I feel like we could talk about this forever, right? So maybe let's call this the first in a series,
Wonderful.
right? And if I were to just summarize kind of the few things that we touched on, I would say that really the idea of going towards the as a service model is to focus on the benefits of scalability, the benefits of accessibility, and the benefits of focusing on the use case as opposed to the utility of the financial services itself. So that is, I think, the first point that we touched on. The second thing that we covered is really to allow different communities and different geographies to solve for specific use cases, specific problems, specific, important enablers for economic development using financial services under the hood, behind the scenes, right? Without you having to focus on the fact that I'm making a loan or I'm making a payment, right? If each of those services is offered as an API perhaps, or is just available for the end application to consume in the back end and offer on the front end to the end user, that's a beautiful thing. And I think the last thing we touched on, and then we're going to continue this series because there's a lot to talk about, is how the adjacencies of financial services are now in a better position to benefit from the innovations in financial services. And again, financial services touches not almost every other industry,
aspect of life, yeah.
From healthcare to agriculture to transportation to logistics and on and on and on.
Correct.
So fascinating here, right? Salil, thank you again. For MEDICI Studio, this is Salil Ravindran and Aditya Khurjkekar.